Hello, folks. Welcome to Kudlow. I'm Larry Kudlow. Before we go ballooning again tonight, and we'll be speaking with Senator Tom Cotton in just a moment, a few words about today's hotter-than-expected consumer price index. It wasn't a disaster, but it wasn't so great either. Basically, the Federal Reserve is still a one-man band, getting no help from Joe Biden's inflationary fiscal policy, but the central bank is making progress. Today's top-line number was 6.4%, excluding food and energy. The core was 5.6%. But one reason I hate the core rate stuff, or other slicing and dicing that's become a Wall Street obsession, is, first up, food and energy are crucial to families. And second, the top-line number really tells you whether your purchasing power and your standard of living is doing better or worse. And the answer is, regrettably, still worse. But at least we've come down quite a bit from the 9% plus readings a year ago. However, bear in mind, consumer prices have increased 14% since January 2021, when Joe Biden took office. And that's another way of saying the dollars in your wallets and purses are worth 14% less than 2 years ago. But I'll warn, food prices are up 10.1% over the past year, and that includes groceries at home up 11.3%. That's a nasty number, and frankly, it has not improved much at all, despite all of the Fed's tightening moves. And that's a very key issue for middle-income working folks and for lower-income people. Also worth noting, real wages dropped by 1.8% year on year. It's another measure of declining living standards. Those real wages have been falling the better part of the past 2 years. This has always been the soft underbelly of the Biden economy. It's the reason why people think they're worse off than they were 2 years ago or a year ago, and why they have little or no confidence in the president. I'll do my once-in-a-year reference to John Maynard Keynes. Inflation is the cruelest tax of all. Now, inside this story, there's some good news. The inflation rate has eased, as I mentioned earlier, and there are some other factors which look to be counterinflationary, namely the CRB commodity index. It's been flat for the last 6 months, and that's after dropping significantly this past spring. And that's a good sign for lower future inflation. It also suggests the commodity value of the dollar is steadily stabilizing and improving, and that's a good thing. This is what happens after the Fed starts raising its target rate from 0 to 4.75%. And I reckon they're going to take it up several more notches. More controversially, the broad M2 money supply has been plunging in the past year after skyrocketing before then. And then the toughest nut to crack is the deeply inverted yield curve, where the 3-month Treasury bill rate is almost 4.80 and the 10-year bond 3.75. In other words, the market's standing on its head. Short rates higher than long rates. It's a leading indicator of lower inflation. It's also a leading indicator of recession. Last evening, former Fed governor and Ronald Reagan appointee Robert Heller suggested the Fed's target rate would go up to 6%. And he predicted a double-dip recession. The first dip was the first half of last year, and the second dip looks to be the second half of this year. I am reporting here, not forecasting, but basically, I happen to think Bob Heller is leading us in the right direction. Now, here's the rub. Judging from Biden's State of the Union message and virtually everything else he said before then, every part of his economic agenda is inflationary. Massive central planning, stifling oil and gas, waging war against business, regulatory control of nearly every part of the economy, across-the-board phalanx of higher fees and taxes. We're going to talk about the junk economics of junk fee politics later in the program. Basically, Mr. Biden wants unlimited welfare without workfare and wants higher taxes on successful earners, entrepreneurs, producers, and investors. He thinks he's waging war against rich people. That's bad enough, but he's actually waging war against jobs and workers. Mr. Biden's a Bernie Sanders Democrat, a.k.a. a big government socialist. He likes employment. He just does not like employers. He wants a government-run economy, which over time will increase demand, and he wants to stifle innovation and productivity, which over time will hold down production of goods and services. He's a spender, he's a borrower, he is therefore an inflator. So like everyone else, I'm glad to see the inflation rate coming down a bit, although frankly, 6.5% inflation would have been utterly unheard of 2 years ago. But if Biden gets his way, it won't last. And that's the problem with this whole story. So I'll just conclude. Save America. How about limited government, lower taxes, fewer regulations, and a sound dollar? And that's my riff.